Hello, my name is Judy Durst, and I am the Director of Education for the New Hampshire Association of Insurance Agents. And we are gathered today so that we can discuss the map changes that are happening to the seacoast of New Hampshire. We have a group of panelists that will be able to hopefully answer questions that are of concern to you. First of all, we have the Insurance Commissioner, Christopher Nicolopoulos, who was previously my boss. Kind of enjoyable having him right there. And beside him is Tom Young, who is our Region 1 representative for NFIP. Over here is Beth Needham, who is the Vice President of our association and is the Vice President of Marketing for OptiShore Risk Partners here in Manchester, and actually all over the place. On the phone is Jennifer Gilbert, who is I like to call her the keeper of the maps. She is the person with the state of New Hampshire who basically provides us with the information about what the changes are going to be. So I'll defer over to Jennifer, and she can explain what's happening at the beginning of 2021 with the seacoast of New Hampshire. Jennifer?
Thank you, Judy. Again, I'm Jennifer Gilbert. I work for the New Hampshire Office of Strategic Initiatives. I'm the state coordinator for the National Flood Insurance Program here in New Hampshire. And what we're here talking about is a FEMA mapping project, called the Rockingham County Coastal Maps Project. It kicked off in 2011, so it's been a long time in the process. Preliminary maps were released in 2014. And a couple of panels were released in 2016. Following that, the project was on hold for various reasons, but has recently started back up again. And as part of this project, some of the water bodies that were restudied, either inland or along the coast, those areas that were not restudied still may have seen some changes in their floodplain boundaries because they were delineated based on new topographic data that was more accurate. So most communities will actually experience a reduction in the acreage of their special flood hazard areas due to the new, more accurate topographic data. And the exception is the town of Rye, which will actually see an increase in their special flood hazard areas. There are a couple of communities that are going to be seeing some new zones. The town of Newington is going to be seeing a Zone A area that they previously don't have on their 2005 map. And the town of Newcastle will gain a Zone AO zone, which they previously did not have. The communities directly along the coast will see more VE zone areas. Currently on the map, the Zone VE boundary is mainly along the beach or along the dune area, but that line has actually moved more landward as a result of the coastal analysis that was done as part of that study. In July of this year, in 2020, FEMA provided notice that the preliminary maps that had been in effect since 2014 and 2016 were going to become effective as of January 29th, 2021. So we are currently in a 6-month period where our office is working with communities to adopt the new map and also to bring their floodplain regulations into compliance with the National Flood Insurance Program. We are also working to assist community officials with conducting outreach activities to notify their residents about the new maps and to get them ready and talking to their insurance agents if they are going to be mapped or experience a change in their flood risk. We've developed a community officials outreach toolkit that includes sample outreach materials that community officials can use to help notify their residents. And all this information, as well as a lot of the FEMA insurance information, is available on our website. If you just did a search for Office of Strategic Initiatives in New Hampshire Floodplain Management Program, you'd be able to find that link under our news and updates. And in addition, you'll also find a link to our New Hampshire Flood Hazard Viewer, which is a mapping tool that we use that's similar to FEMA's National Flood Hazard Layer. but it's specific to New Hampshire. Many communities have parcel level data available. So you'll be able to see parcel level data as well as contour elevations on our viewer. And in addition, we have both the current effective maps available for viewing as well as the pending maps. And we have a sliding tool in which you can look at a specific property and slide the tool to see the difference between the current and the pending map. So that is a quick overview of where we are at with the coastal map.
Jennifer, I've heard that there are some properties that are actually no longer going to be in a special flood hazard zone. Is that correct?
Yes, because of the new topographic data, a lot of the floodplain boundaries are actually shrinking. So some people are going to be seeing that their property or their structure is going to be removed from the floodplain.
Wow, okay. All right. So what, I'm going to ask the panelists now, what, what are we going to do to get this information out to our insureds, and what are their options? Anyone want to start?
Well, I think, Judy, I think that's the reason we're all here today, is because the agents are going to play a pivotal role in ensuring both that they're getting this information out to their insureds and prospective insureds, people that they have traditional insurance or they have relationships with, so that they're aware that, as I assume we're going to talk later, that there's some real advantages to getting into the program before the maps change. This information, this planning, the planning between now and the end of December is going to be key to protecting their interest. And those are going to be hard conversations for agents to have, calling up an insurer or a client and saying, we need to talk about an insurance product you don't currently have, or the impacts of being in the private market or the NFIP, and the value, the asset value of having what ultimately may turn into a grandfathered plan going forward is a super important conversation for our agents, and that's why the department agreed to be here. That's, I'm sure, why Jennifer's here, and it's going to be work for all of them, but they play that pivotal role of advisor to their clients.
Okay.
And in speaking to agents in preparation for this, that is the agent's biggest question, is grandfathering. What happens? How do I make sure my insureds, if they should be grandfathered in, how do they make sure that that happens for them? What happens if they don't grandfather in prior to the end of the January effective date? So if we could talk a little bit about the grandfathering process for agents, that would be helpful.
Tom, you want to take that?
The agents are so valuable. Independent agents, all insurance agents deal within their communities, and their communication with the community officials and making sure the community officials are aware, making public notice, but also working with lenders and realtors. Most insurance agents have a very close working rapport that is so valuable, because when this happens, it's just like having a major flood loss in a community. It just draws the resources right out of the community. Something like this can also draw available resources of the public. So grandfathering is an extremely important facet of this. If a property is in an X zone now, not in the special flood hazard area, they should be looking at these maps to see if their building or even if their land is touching the new designated flood zone. True, if their land is touching but the building isn't, they can get a letter of map amendment to be removed. But if they jump on it, if their building is in there now, and if there's any inkling that a lender will require flood insurance, they should take out a preferred risk policy in the X zone now before the maps change. And that will help them after the maps change, because it will give them the PRP policy for 1 year. And then after that, the maps change, they're in an A zone or now a B zone. they will be able to use the newly mapped program, which is using the PRP rates. The PRP, preferred risk policy rates, will be used for the first year, and then the second year after that, they'll see roughly a 15% rate increase annually until they get to what's called the full risk rate. So if they have a policy in the X zone now, they get the PRP, then they go to newly mapped, they will be able to take advantage of the grandfathering under continuous coverage, which will put them in a standard flood policy rated in the X zone. Now, I can't give rates or costs, but preferred risk policy full limits is probably around between $550 to $600 for a primary residence. But if you look at a standard flood policy, you're probably talking about standard flood in the X zone, probably $1,300 to $1,400 for a primary residence. Now, I keep saying primary residence because there are additional charges if it's a secondary home. And there are other factors that come into the rating play. So I'm just using general numbers here just to give you an idea, because if you get the newly mapped after you become an A zone, you could be looking at $3,000 for simply $250,000 worth of building coverage, not including contents coverage.
In an A or
In
a
an
V.
A zone. In a V, an older building, not a post-firm building, but an older building, a rated pre-firm, you could be looking at $6,000 or $7,000
Wow.
a year. So there's a big discrepancy, a big variance. That's why it's so important to get it in the X zone.
In the map changes, Jennifer, you had mentioned Rockingham County. So this is only impacting Rockingham County, is that correct?
That's correct. It's 15 communities in Rockingham County that are impacted in this project area.
And I think Tom's information was very helpful, and I just want to point back folks to the overlay maps that are on the Office of Strategic Initiatives website. Last night I popped on, put some addresses, affected addresses in on the seacoast, and was able to see old map designation elevations, new map designation elevations. I was even doing it on my phone, and all of the functionality was there.
Great.
Phenomenal maps, great resource. For the kind of Main Street agents in a community that's affected, you're going to be able to do a lot of your due diligence right there, literally just viewing up and down the street as you drag and drop through the maps. And I think it's also important, Tom, to remember that for all federally backed loans in special flood hazard areas, there's going to be a requirement that you have coverage. And even loans that you get from your local bank are probably done on the federal loan forms, because even the local banks want the ability to, if they need liquidity, to turn that over to Freddie and Fannie. Fannie and Freddie. And so this isn't a question about, are your clients going to want to talk about flood insurance? It is, they are going to have to talk about flood insurance. And if they have to talk about flood insurance, their expectation that you, as their agent, would have tipped them off before the end of December is key. And probably the most important thing you want to take out of here today is that people are going to perceive that you are their agent and you were going to notify them of this change.
You're absolutely right, Chris. And one of the things that we all recognize is that the insurance agent is out there to provide risk guidance to their clients. It's one of the most fundamental and one of the most valuable. Short term, but also long term. That's why we sell life insurance, health insurance. Many people that own property on the coastal areas or even along shores or lakes and rivers are of my generation, which is probably a little bit older than everybody here on the table. That generation is fortunate because most of them have paid off their mortgages. And they're looking at estate planning. And we're in there counseling them on life insurance products and various other tools. But we're often not talking to them about, gee, you're in the flood zone, you should have a flood policy now so that if something happens to you, your estate can be protected and can be grandfathered. Most valuable thing, because quite often what we see is after the owners have died, the estate comes in, they can't afford the flood insurance, so they have to sell. And it's usually a heartbreaking event because they've all grown up in that seacoast environment.
And can you speak a little bit about sale of property? So you just had the scenario of parents passing away and wanting you want the property to stay within the family. But there are situations where when you're selling your property, and the flood insurance can become important in the real estate transaction too, correct?
Yes, just like Chris has highlighted. If somebody is preparing to sell, I would recommend that if they haven't gotten an elevation certificate, they get an elevation certificate, because usually the newer houses, the towns are requiring that if they're in the flood zone, they have an elevation certificate so that they're built in compliance with the flood codes. And Jennifer can talk more about that. The older buildings, quite often, may not have been built to the codes, but with minor modifications, they can be prepared so that they meet underwriting specifications and the cost for flood insurance when the lenders say you need flood insurance are minor. Just about everybody calls me about 2 days before closing because the bank has told them you need flood insurance, and people are saying, I can't qualify because I'm gonna need a flood insurance policy that's $6,000. What can I do? So it's very important.
Real estate transactions are complicated financial analysis, and we all know that when interest rates go down, the value of property goes up. When taxes in a town go up, that adversely affects values. When you potentially are adding a cost of $500 to $6,000 for flood insurance, there's a calculation, and that ultimately will impact the value of the underlying property. And that's why I think the grandfathering potential of properties that are already in the program and are getting preferred rates or locked-in rates, you will actually see properties have more value in transactions because of the grandfathering. Tom, on that point, I have a question about how that will work 5 years, 10 years from now, when somebody's looking at buying a house and they want to verify continued coverage and grandfathering. Is there a tool for that, for agents or for real estate agents?
Well, that's a multiple response question. Because of privacy issues, realtors don't really have access to claims history or to other people's policies. One of the most valuable tools in the flood policy is the ability to assign the policy from one owner to the new owner.
Okay.
And if the policy is grandfathered, it's carrying forward either built-in compliance grandfathered or under continuous coverage grandfathered, that is extremely valuable. Because you could be talking about hundreds of dollars, and as you've highlighted, a $200 increase can kill, per month can kill a transaction, a loan transaction.
So the tool will be the current policy that's rated for grandfathering or built-in compliance. So that will be the tool that people will look at to have confidence that it's continued coverage or grandfathering.
Right, and that's going to be designated on the deck page of the NFIP policy.
Perfect.
Now, one of the things you have to keep in mind is when the maps change, the agent has to notify the carrier that the policy should be endorsed for continuous coverage grandfathering. Because if that doesn't happen, the policy doesn't get endorsed. It's not an automatic between FEMA and the insurance carriers. And I run into that often where other agents are coming in, they're very savvy about the flood program, and they're able to persuade the policyholder, causing a change of agent, which is, I'm looking to protect the agents of record. I'm looking to protect the public as well, so that's why I'm bringing it up. And one of the things I'm finding is that FEMA, Region 1, and myself run into this all the time, is agents haven't done that, and buildings have gone through what's called substantial improvement. That's where the value of a building, let's say, is $50,000 right now. Somebody buys it and puts in $25,000 to $30,000. That's over 50% of the value. That is substantial improvement, and the communities are required to bring the buildings, make sure the buildings are brought into compliance. So if a building is now in the flood zone, undergoes substantial improvement, it should be built in compliance. And the rating from an insurance standpoint will be very competitive, very, very low.
Because you did everything right.
Exactly, the building has been built. So
Right.
what we're seeing is, and Bob DeSaunders from Region 1 and I, we've been around long enough to know that the blizzard of '78 caused a lot of damage. Kind of dates me, right? Did a lot of damage in the New England area. And within the Cape and on the coast, most homes that are right on the water were substantially damaged or destroyed. So they were built in compliance, and what we do is the policyholders go to the building inspector or the code enforcement officer, ask for a copy of the building permits for the historical aspect of the building, and with that document, they can prove substantial improvement, which goes to built-in compliance grandfathering, not continuous coverage. And built-in compliance is better in many ways, because it shows that there was an intent of the property owner.
So what you're saying is that if, for example, the house that I had purchased was built in 1987, and if it was in a special flood hazard zone, and if it changed to a special flood hazard zone, but in 1987 when it was built, it was in compliance with the zone, the map that was in effect in 1979, then I keep that unless there's been a substantial improvement.
Right, and you've qualified it because you're telling us that there was a map in 1979, so under the community status book, that would show that the town was part of the flood program.
Okay. And that's important because if I'm going into an A and I was an X, man, that's going to make some big difference in my premium.
Very big difference, because all of a sudden, under the standard flood policy, you're going to be full risk rated in the X zone, under built-in compliance.
Right. And B, C, and X are the preferred
Low hazard,
rates.
low and moderate hazard rates.
Thank you to our sponsor of this podcast, Selective Flood Insurance. Did you know that over 26 million Americans were affected by a natural disaster in 2017? Yet only 12 out of every 100 homeowners had a flood insurance policy. Selective can help your agency with a variety of specialized training classes to help teach your agents more about the importance of flood insurance to help protect your insureds from becoming a statistic. For more information, visit their website at www.selective.com/agents.
So basically, Beth, what does an agent need to do now? What's the thing that they have to put into place, the procedures they need to put in place, and what's going to help?
Well, the first thing is to identify the properties, which of their insureds are potentially impacted by these map changes. And Judy, you gave me this list of towns with zip codes. So this is something certainly within your management system, running a report to be able to identify any properties that are falling within these zip codes. Chris and Tom spoke about the maps and overlaying, and Jennifer on the Office of Strategic Initiative, going to that website to find out which properties are increasing their hazard and then which properties are decreasing their hazards. So those are certainly the first steps that need to be done. And then depending on the information that you find, taking the appropriate steps. And Tom, you had mentioned the continuous coverage endorsement. for some, that would be appropriate to be added to the policy. Would it be Region 1 that if agents have questions, would it be your office that they would call? Who's their flood underwriter? Who's the best person for them to call?
Best person is the flood underwriter for the carrier. If issues arise, definitely call me, and I'm sure you have my contact
Mhm.
information.
Okay. All right, so what
It-
about, I'm sorry.
Oh, no, I just wanted to say, in part of it is identifying which of those properties are falling within these zip codes that don't have flood policies. So we can't be running reports on just people who currently have flood, either a standalone flood policy or maybe they have it within a property policy, because this is commercial and homeowners.
Absolutely.
I mean, obviously, we think most of the time personal lines and homeowners coverages, but it potentially is impacting commercial coverages as well.
Beth, just to add to that, one of the things that Jennifer highlighted was that several properties are coming out of the flood zone. They may have flood policies already.
Currently.
No one's gonna tell those people that they're no longer in the flood zone. There's no mechanism to put out a flag and say, you're not in the flood zone. So.
In the special flood hazard
in
zone,
the
everybody's in a
special-
flood zone.
We're all in a flood zone, absolutely, absolutely. The key on that is, quite often the bank they'll go for a mortgage and they'll find out that, hey, yeah, I'm not in the flood zone, but I've been paying insurance forever. Well, they may not be paying for a preferred risk policy. So what I suggest to agents is talk to the people that are coming out of the flood zone. Explain to them that they're no longer in a high risk, they're in a low hazard, and change their policy to a PRP. You can endorse the policy to a PRP if they're in an A zone and get a refund.
But that protects them for future, because if they, thinking like some of our insureds will, oh, I'm not in a high hazard zone anymore, I don't wanna pay it anymore. Certainly that is their choice and their tolerance of risk, but as a risk management tool would not be something that we would recommend versus keeping their policy, keeping their continuous coverage, reducing the premium that better reflects their hazard, which has been reduced, but to keep the policy in force.
Absolutely, and we recommend.
Because they could change again.
We recommend keeping the policy in force. They don't have to have full limits, but we have to really make sure that the agent understands that if there's a lender involved, the lender has to make the call that they are released. So the property owner has to approach the lender and explain that there's been a change in the mapping and request to be released before they can go to a PRP. Because quite often we see conflicts between the agent, the policyholder, the carrier, and the lender. And in that case, the lender is always going to win because they're protecting federal funds. And I had a policyholder yesterday say, you know, this is an insurance policy, it's supposed to be protecting me. And I highlighted to him that, no, you wouldn't buy this policy if it wasn't for the bank. This is protecting the federal funds. But we'll sell you a policy for you personally to protect your assets.
Yeah, 'cause
So
many,
in,
oh, sorry, go ahead.
so in that case, if the bank is giving them a hard time about going to the preferred rate, is that something that someone in your office would help? If there's questions, to be able to show that,
We would work with
to
them.
try to convince them. Now,
Well,
obviously,
We'll try to convince them, but we'll also show them the process, the letter of map amendment or the letter of map amendment out as shown. The letter of map amendment out as shown, and probably Jennifer should be the one explaining both of these because one's a little bit more expensive than the other.
Jennifer?
Yep. So letter of map amendment is a process available to property owners at any time to show that the map is just not built to show a level of detail. So you have areas that are on higher ground that at the map scale you just cannot see. So this is a process where property owners can submit an application to FEMA to show that their lowest adjacent grade of either their structure or their lowest lot elevation of a property is actually at or above that base flood elevation. And so FEMA makes a determination if it does meet that criteria, of being at or above that base flood elevation, that lowest ground, that they'll remove the structure of the property from the floodplain. So many people have done that. It's usually the one documentation that a lender will accept to release that flood insurance requirement as a condition of that mortgage. There is that also, what Tom mentioned, that letter of map amendment out as shown. That is a process that can be done, unlike the other process I just described, which you do have to submit certified elevation data, so you do need to get a surveyor and engineer. So there is that cost involved in hiring that person. But the letter of map amendment out as shown is something that a property owner could theoretically do themselves. But you have to have a clear map that clearly shows that the structure is outside of the floodplain or the special flood hazard area. So you can submit it through that process, and we have all that information on our website as well. But in regards to a new map, along with the notice that FEMA issued, the determination that the maps are going to become effective in January, they also issued what they call a summary of final map action. So all these LOMA's letters of map amendments that have been issued since 2005, the mapping contractor had to look back to see whether or not these LOMAs are still valid. Because if there's a new coastal study, that can result in a higher base flood elevation, which would make that LOMA no longer valid. So they have gone through that analysis, and the summary of final map actions was sent to all the community officials. Our office has a copy of it. So there's going to be some LOMAs that have been issued in the past that are no longer going to be valid, so they're going to be right back in being located in the high-risk area. Then there's going to be others that are going to be revalidated. And so FEMA releases what they call a revalidation letter the day after the maps become effective. That will be available on the Map Service Center, and that's going to list all the LOMAs that have been issued that are now valid as of the 2021 map.
So I think from the standpoint of talking about flood insurance, I think it's important for everyone to understand that it isn't just the communities that are in an A or in a V zone that have losses. 35% of the floods that occur in this country are in a preferred risk zone. So by telling your client, geez, you're not in a flood zone any longer, you could be opening yourself up and the insured to a loss that's not covered. So I just wanted to mention that. When should the person be purchasing a flood policy to take advantage of grandfathering?
Well, that's one of the concerns that a lot of agents have right now with the maps going into effect January. They're thinking, well, you got that 30-day wait. So one of the things I did is I contacted the New Hampshire Association of Insurance Agents preferred carrier, Selective. And I asked them, if somebody is now not in the flood zone, and on January 15th, they approach an agent and say, I want a preferred risk policy. Because the maps are going effective on January 31st, roughly 16 days, 15, 16 days, the preferred risk policy is available to them if the application and payment is issued and received by the carrier prior to the effective date.
I didn't know that.
So the grandfathering that I was talking about earlier, where this becomes a PRP, and then it goes the next year to a newly mapped rate, which is the same as the PRP. That's the second year, and then the third year, it gets 15% rate. It pushes it off a little bit, but it'll be grandfathered in the X zone under continuous coverage. So even if somebody's in an A zone now, going into a V zone, they should be looking at getting that flood policy before the maps change, making sure the application and the payment is issued. Because, yes, there's a 30-day wait, but as long as the application and payment is received, that's it. And now, the flood manual has been changed over the last year, and some people enjoy it and some people don't. We're creatures of habit. I would recommend agents look at the flood insurance manual, follow how to write rules under section 3. Because in there, it tells you how many days you have to issue payment before the carrier has to say, this wasn't on a timely basis. It also goes through the process of grandfathering, continuous coverage, and much more detail to protect you, the agent, from errors and omission issues.
I think that errors and omission issue, people know that I may be commissioner now, but I spent 5 years here as president and CEO of independent agents. And independent agents, I always worry about them, and I think that reference to, kind of justifies a conversation about what an agent should be doing in light of these map changes. And I think all agents need to be thinking about this if they have any insured risks in the new flood map zone areas. They need to internally adopt policies about how they're going to cross-reference both their current flood covered properties, flood insurance covered properties, but also for those insureds that have currently no flood insurance who could benefit from grandfathering. They need to adopt a policy, they need to record that in their management system, they need to create notes such and disclosures to their insureds such that 3, 4, 5 years from now, if there's an issue and a plaintiff's lawyer says, let's sue the independent agent, that you have records sufficient to remind you of all that you did back in 2020 while working remote during COVID. Without those records, it's going to be very difficult for an agent to justify that what the decisions they made regarding notifying their insureds about these flood map changes were prudent. I would recommend that you talk with your lawyer or with Judy and Joan about what the other agents are doing, what the standard of care may look like later. It's hard to look back now, or look back to now and know what people are going to be claiming later, but I can assure you good records, a policy, a scrub of your entire client management system are absolutely necessary parts to good proactive planning.
Just to add to that, Chris, one of the things I recommend is, as Judy has highlighted, if you've ever attended Judy's flood class, she's highlighted, we're all in a flood zone of some type. Agents should be offering flood insurance to everybody and making sure people are signing off that they are declining coverage to protect the agent. Quite often, I've been involved in disasters in Houston, New Orleans, Baton Rouge, Florida. People say, agent never offered me that. Or all of a sudden they've been removed from the flood zone and or the mortgage has been paid off, and they go to the agent and say, I don't need flood insurance anymore. And the agent goes, you don't need flood insurance anymore. Mm-hmm. Well, that's just opening it up, because Harvey in Houston had over 270,000 claims, and of that, only 85,000 had flood insurance.
Wow.
So people were scrambling, looking for who to blame. Also, another item that agents probably aren't aware of, but there's the mortgage portfolio product out there that is sold to the banks, and the banks are basically protecting their mortgage portfolio from people who haven't bought flood insurance. And it's a good tool to protect the bank's mortgages. If an agent has identified that with their client, they should be talking to them about selling them a flood insurance policy, because the bank is only insuring their loan, the mortgage amount. During Sandy, I had a couple down on Breezy Point, New York, that lost their house, and they were just teeming with praise for their lender. who helped them clean up their $110,000 loan, but they're like complaining about their insurance company. And then when they gave me the name of the insurance company, I was kind of cross-eyed because I'd never heard of them before. And what it was they expected their insurance company, who the bank had hired to protect the loan, to provide them with insurance coverage, which doesn't happen. And a lot of people misunderstand the mortgage portfolio program when the bank offers it. So I just throw that out there. It's probably a good marketing tool to get across to your clients.
Okay. What can someone do if their house is going to be now in a A or a B zone and it wasn't before? What kind of mitigation action can they do? And who can help them with that?
There are a lot of resources on the FEMA website about different mitigation options, and they range from things that seem crazy here in New England, like filling in your basement, but they also include preventative steps like having flood cuts in your foundation walls or moving your heating systems above the floodplain.
Putting in flood vents around the
The
crawl
flood vents,
spaces.
right.
Yes.
And so there are a number of things that potentially would impact that. Obviously, getting out of the zone to the extent, one of the recommendations is lift your house up, but that would be difficult.
Yeah.
But I think any of the kind of preventative measures they take to get the expensive stuff out of the lowest potential points are going to be helpful. And I think being aware of the rules and regulations about how flood policies are rated gives you ideas for how that plays out.
Absolutely, Chris. A lot of people think, well, I moved my machinery and equipment up to the first floor. Well, moving machinery and equipment is good, but that's just a little loading factor that's being applied. The basement issue, having that lowest floor is a key, because the flood insurance policy is one of the only property policies that cover the foundations and footings. So as long as those are covered, that's why they're going to use that lowest floor elevation.
Yeah, and it's key for property owners if they don't have an elevation certificate to get one, because that's the only way they're going to know what they need to do in order to get that more favorable flood insurance rating. And they should always coordinate with their town's building officials too, because they're the ones that need to go through the permitting process with. And they can tell them how to meet those requirements, the minimum at least.
Okay.
And Jennifer, these maps will go in effect in January. It's not a case of the towns have to accept them or something. Is that correct?
That's correct. If the towns don't adopt the maps by the effective date, they get suspended automatically from the National Flood Insurance Program.
Okay. So they either accept it or they don't, and they don't play ball if they don't accept it. They don't play in the National Flood Program.
No, we do have one community that we're working with on trying to get them in compliance with the NFIP. Our hope is that they will be able to resolve the issue and we will avoid any communities being suspended from the program as a result of the map becoming effective.
And the suspension has a major effect because it goes into runoff, and it has an effect on the lenders, because all of a sudden the lenders will have to start calling loans, or the agents will have to start finding private policies if it's available in the community.
Yeah, and private policies, private flood insurance carriers are available, but at least in New Hampshire, all of them at this point in time are not admitted. And so they do not follow the rules and regulations set up by the insurance department. And so there is some scary parts about that they may just walk away if they are having losses. So there is a private flood insurance program, but I'm just concerned that people will use it to and lose their grandfathering.
Judy, that's my concern with private flood insurance. Private flood insurance plays a pivotal role in having a competitive market here in flood. And when Judy references they walk away, we're not concerned at the insurance department that they'll walk away and not pay claims that they're liable for. I think what she means is that they may be here today and are really excited about writing private flood here in New Hampshire, and after a catastrophic loss, they say, you know what, it's not our market. We're going to non-renew these policies next year, and we're going to leave the marketplace. And you may not, at some point in the future, have as a competitive private flood market that we have today. We do have confidence that the private flood insurers out there now are well capitalized. They have money behind them. They have reinsurance behind them, and they've played a critical role in offering other options in the marketplace.
Absolutely.
But when you start talking about the kind of substantive benefits of grandfathering and locking in the old zone rating, you're not going to get that in the private flood market. And so we need to be looking at all options on the table.
And you won't get that back if you go from private back to NFIP. It's gone forever, the grandfather.
There'll be a need for an elevation certificate, and rating would be from the lowest floor. A lot of policyholders looking at the cost, they're failing to understand on the older buildings that the rates are gonna go up pretty firm. And when it's low, it's time to look at mitigation, because you can afford it a little bit better than when your insurance is at $3,000 a year. And, you know, I'm not sure if you want to talk about grants that might be available out there. Jennifer, would you want to tackle the availability of any grants?
Yeah, there's FEMA mitigation grants are always available. They're done through the state Homeland Security Emergency Management Office. They administer those grants. They are available to assist communities, property owners with doing mitigation projects. There is a lot of criteria and eligibility requirements, and the community itself has to apply for a grant on behalf of the property owners. They always need to have the community officials involved in the process as well. But those are some options out there. And I know that there's some, I can't remember the name of it, but it's a federal housing loan that's available that will help property owners with a loan to elevate their structure as well. I know the Association of State Floodplain Managers has information about that on their website.
Am I mistaken when I say that the availability of grant is given on a priority basis to those properties that will yield the greatest cost benefit?
Yeah, with every mitigation grant there, you have to do a cost benefit analysis. So they need to provide proof of any damages or losses over time, and they compare that to the benefits of the elevation or whatever the mitigation project is. So it does have to meet certain criteria for that cost benefit analysis.
So just because somebody's got mapped in, the availability of a grant to somebody who just got mapped in is probably a lot lower than somebody who's flooded out 5 or 6 times, because the cost there over time has probably been hundreds of thousands of dollars. So the grant program is kind of designed for primarily those. I did have a lady in Connecticut who applied, her town supported her. She had just gotten flooded out by Sandy, $40,000 loss, but she had had other small losses. And all she had to do was put flood vents in her crawl space. And she was rated from the next higher floor, which was a +2, which brought her insurance from $2,000 or $3,000 down to about $1,000.
Wow.
So it was a big benefit to her, big benefit to the program, and it was a low-cost investment.
Okay. Any last words or anything, any other questions that anyone would like to ask?
I just want to say thank you, Judy, for having me here. And my last advice to the agents out there is don't sit on your hands for the next 2 months.
Right.
Develop a plan, talk to your teams, figure out how you're going to process your accounts. If you have questions, use your resources. This is the time to be on the cutting edge of what independent agents should be doing, and don't let this opportunity pass you by.
Yeah, and it just doesn't apply to independent agents, although we are the independent agents in New Hampshire. We are, you know, there are other agents as well that can benefit from this information. So I guess when in doubt, sell them a flood policy. Right?
Mm-hmm.
Okay. Thank
I
you
just
very
have also one thing to add is that these coastal maps are just the start of what's going to happen in New Hampshire. We currently have 12 mapping projects in the works right now in the state. Our next one is going to be the Merrimack National River Watershed Project. Preliminaries are expected next year and effective date of 2022. That involves 74 communities, so
Wow.
this 15 community project is small compared to that one, so just be prepared that these new maps are going to be coming out through these 12 mapping projects in the state over the next several years. So we've had a 7-year lapse in the last time we had a big map change or new maps coming out. So this is kind of just the start of new maps coming to New Hampshire.
So Jennifer, your advice to agents is to get a process in place and understand the flood program, understand the ramifications, and get really good at documenting in their process so that when the next one comes, they'll be ready to reach out to their insureds.
Yeah, so a lot of what we're talking about is specifically towards the coastal maps, but just for agents that are outside of the coastal areas, just know that what we were talking about today is going to be coming towards them in the future with future mapping projects. And we do have a page on our website of all the mapping projects. We have an interactive map that shows all the different watershed projects that are underway, and we do keep a status report. So agents can go there at any time and just kind of keep up to date on what where the status of those mapping projects are. And of course, we have a Floodlines newsletter, which we put out quarterly, that gives updates all the time. So agents are certainly welcome to subscribe by email and keep up to date on those upcoming map projects.
Well, thank you everyone for joining us today, and
Thank you,
a lot of
Judy.
work has to be done.